Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
So glad to have you back and for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. You can also go on TomWilsonProperties.com, sign up for our weekly newsletter, and also by doing that, we'll get you access to commercial syndications that you can buy shares of for $50,000 a share on office buildings, retail centers, single-tenant industrial, assisted living facilities, etc. And you can go on the website and see what kinds of products we've offered in the past. And we've also provided many rental homes to investors, and we still have some of those from time to time, but they're getting a lot harder to get hold of. We always welcome your questions, of course, and we're delighted to have today another special guest, and this is Mitch Stephen today, who's in San Antonio, and he is an author, investor, flipper, educator. He's flipped over 1,000 houses. And he's an author of a book series called My Life in 1,000 Houses. And as they say on the advertising on the insurance on TV, when you've done that much, you've probably learned a thing or two. Mitch, welcome to the program.
That was good, Tom. I like that. Thanks for having me.
My pleasure. And it was great being on your program there in the past. And we got to ask you, was real estate your first career, or did that come along a little bit later?
No, it was the only thing left. I had failed at everything else in the whole wide world. It's like, if this doesn't work, I'm just going to go shoot myself.
So you were doing other things first, and then you found real estate.
I was a serial entrepreneur. I just didn't find my niche. Either I would do the work and I couldn't find a way to get people to pay me. Doing the work's half the job. Getting paid is the other half of the equation. Sometimes you do a great job and people just don't pay, especially if a recession hits.
Yeah, indeed. So what planted the seeds for your interest in real estate investing? What planted those seeds? The first thing was a guy named Robert Allen wrote a book called Nothing Down, and I thought, he had the audacity to suggest that I could be a player in the real estate game with no money. And I thought, well, if it takes no money, I can buy the whole town. So I got that covered. Yeah, I met Robert Allen, went to a couple of his courses, and he was one of those pioneers, wasn't he, that kind of launched that whole new paradigm concept of investing in real estate instead of just before that it was mostly you either owned it to live in it or you were a large investor, institutional investor that had multifam real estate as rentals, other than maybe hanging on to your first house, was not really a business for the individual investor much before that, was it?
No, but the thing is, even after reading that book, it took me 7 years to own the concept in my heart, which happened by accident. I negotiated a nothing down deal out of necessity because I didn't have any money, and I just kept refusing to let the deal die on my side of the table. So I just kept countering with nothing, and reasons why. And someone took it, and then all of a sudden I owned the concept in my heart, and suddenly I could buy the whole town.
Passion, perseverance, and patience is, virtues that can overcome a lot of challenges, can't it?
Well, yeah, sometimes we're just not ready to learn or to understand a concept or the theory. And as you get older, if you stick with it, all of a sudden it just comes into vision. It's like those pictures where you got to kind of slightly blur your vision to see the picture inside the picture, kind of like that.
Yeah, that's an interesting concept. So you had the so you finally had a win, and what was your objective? Was it for long-term hold, or at that point, I guess, since you was that for the was the ownership of that for purpose of flipping, or for long-term hold?
You know, I was at the point where I just needed to make some money and put some money in the bank. I was newly married, and I got the place for $0 down and no payments for a year and a half, but it needed about $15,000 in remodeling, and it was a fourplex. And I went and got that on 0% credit cards, and I tried to hide that credit card bill from my newly wedded wife, and of course I got caught, and it turned into a quick flip situation very quickly.
and I got to ask, is she still with you?
Well, you know, she had her bags packed. I mean, she really did. She really married about 30 days. I hadn't learned yet that you can't get away with anything. I tried to get out to the mailbox before she got there, and one day I didn't get out there fast enough. And make a long story short, she had her bags packed, was in the car, and I stand in between her. The door in the car was open, and she was sitting in the car, and I stood between her in the door so she couldn't shut it. And I said, I'll prove to you that you're being irrational if you'll give me like 1 minute. And she looked at her watch and actually waited for the second hand to swing around. She said, okay, ready, go.
And at that point, you thought to yourself, dang, if I'd said 2 minutes, she probably would have given it to me.
Yeah, I could get through it in a minute, though. So I just said, look, you think I'm gambling. I'm not gambling in any sense of the word. I know what that house is worth when I bought it. I know what it's going to be worth when I fix it. I know exactly. There's data. I'm not making this up. There's really tried and true data. It's not a guess. And let's just associate it to something that was like gambling. Like, if you think I'm gambling, then let's relate it to poker. This is what you're doing. We're playing a game of poker, 5-card draw. I've discarded my 2 cards. I'm all in. I'm like $15,000 in. And you're walking away before I get my 2 cards. I mean, you can leave me if I lose, but what if I win? You know, what if I win? What if I'm right?
So how did that play out?
She said, okay, we'll see how we do. And then I got it fixed up. I got it leased up. And then I had to, instead of holding it for the cash flow, I had to sell it to quell the situation. So I sold it, and I made $38,000, which is what my wife made exactly per year at the time. And I put it in the bank, and I said, you know, I just made what you make working a whole year in this last 60 days. So can you lighten up a little bit on me and let me run a little bit? Because I'm going to run anyway. So you might as well on yourself.
Well, the best success in that story was that you kept your bride.
Yes, I did. But, you know, she was an empty nester, lost her parents at a very young age, didn't have really any family except her sister. You know, always trying to hold a nest together. I was her third marriage. We've been together now 28 years.
Good. That's the part of the story I wanted to hear.
Yeah, 28 years. And but I drug her into entrepreneurialism, kicking and screaming. I drug her like a cave woman by the back of her hair every day. And she just would scream at me, when are you going to get a regular job? I can't live like this. I said, what do you mean you can't live like this? I've put twice your yearly salary in the bank. What are you worried about? You know, but entrepreneurialism doesn't come easy to some people.
It's a hard paradigm to get out of, right? It's why I think Rich Dad Poor Dad was so popular, is because all the other books were about nuts and bolts and not about shifting your paradigm thinking, and that's I think that's why it was so popular.
I took a lot from that book. I read that book, and it was part of my growing up process and my mind shift, because I didn't have a college degree. I did one vigorous semester of college and figured out it wasn't for me. Actually, I discovered that my college professor was making like $50,000 a year, and I came to the conclusion that I'm not listening to anyone talk to me about making money that's not making $1 million. You know, and it sounds arrogant or maybe pompous, but I didn't shout that out. I just felt that in my heart, like, why am I listening to this guy?
I stopped investing in the stock market for the most part, other than some index, holdings. One day when I went to visit my stockbroker, and I pulled up in the, it was a major, they're all the same. This happened to be Merrill Lynch, and I pulled up in the parking lot where all the brokers parked, and we're calling up folks that are very wealthy and giving them these hot tips. And I noticed all the cars in the parking lot were, cheap cars. They were they were Honda Civics and everything else. And I thought, well, wait a minute. If they're so darn smart, why don't we see some Ferraris and Lexuses and things out here in the parking lot?
I doubt it's because they were fiscally conservative.
No, I don't think so either. Well, I've had the pleasure of spending a fair amount of time with Robert Kiyosaki here over the years, and he certainly has a passion for educating, the giving financial education to the general public and doing a good job. And of course, it started with that book. It was, he's actually had the cash flow game first, and he couldn't sell it, so he thought he'd write a book to help promote why people should get that game. And then, can you believe it's been this last April was 20 years, the 20th anniversary of the launch of that book.
Unbelievable. Time flies when you're having fun, huh, Tom?
Yes. So how did you scale from your first one that took you a while to do and worked hard to get your bride on board? How did you scale from that to a fairly large volume per year?
Well, I started doing rental houses, but the money that was supposed to hit the bottom line, at least for me, was a myth. It would get eaten up with all the liabilities that I had, and it never would really make it to the bottom line by the end of the year. So I got real discouraged. I wanted out. I hired a mentor with the last $10,000 I had, which was back in the mid-'90s, and he said he knew how to get me out of this, but it wouldn't take very long, and what he would tell me would be very short, and it might not seem like it's worth $10,000 to me in that moment, but that it would turn out to be thousands and, hundreds of thousands. And he told me how to owner finance and get like $3,000 from each of my 25 renters as a down payment, and then start collecting payments that were equal to the rent, except for when I collected the payment, I didn't have any liabilities. If the check cashed, it was my money. So I went and got $3,000 from 75 people, more or less. From 25 people, and I had $75,000 in the bank, which was not a deposit. It was my non-refundable down payments. And the $7,500 a month or the $300 a month per house that I was supposed to clear in rent, I was really starting to clear as an owner financier because I had no liability.
Interesting. Mitch, let's have our audience hear a little bit more about the details of this when we get back after the break. We have Mitch Stephen on with us today, who's an author, investor, flipper, educator, author of the series My Life in 1,000 Houses. We're on KDOW, AM 1220, the Wall Street Business Network, and this is Real Estate Radio Power Investing. Stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We have with us from San Antonio, Mitch Stephen today, author, investor, flipper, educator, and author of My Life in 1,000 Houses series. And he's talking about how he got started, and we're about to talk about owner financing because that's what took him from small scale to large scale. So, Mitch, you had accumulated a number of houses. I think you said about 25 after a few years of false starts. You finally got the machine going, and you accumulated some houses, and you were still struggling a bit for cash flow, and then somebody told you about owner financing. Let's talk about that. Give us some more detail about how that works.
So a typical deal was I would buy a house for and this was 20 years ago, so you can kind of extrapolate the numbers up, but we still have very affordable housing in San Antonio and in Texas, which in San Francisco you're not going to be able to relate to, but I'm still buying houses for $30,000, $40,000, $50,000, $60,000. And I'm still able to owner finance them for roughly double, give or take 10%. So I borrow $50,000 to buy a house from a private individual. I give them a first lien on the house, And I know based on the rents that I can owner finance the house for like 110, and then I'm asking 10,000 down, and I'm carrying 100. So 50,000 at 8% interest only for 5 years. My payment's around $350. I sell the house for 110 with 10,000 down. I got a $100,000 note at 10% for 30 years, and I'm collecting $850 principal and interest. And so I'm making a spread of $500 a month, and I got paid $10,000 to make that happen. And I've done it, going on 1,600 times now in my career.
And so what you do is your business now is getting the spread between those two loans, and you're also have passed the responsibility of taking care of the property off to the owner, the new owner, right?
I'm not the owner. I'm the bank. If your faucet breaks and you owe a payment to the bank on your house, you don't call the bank to get them to fix your hot water heater or your faucet. It's your house. And the same here. They make their payment to me. I make the payment to my private lender. It's called a wraparound mortgage. My owner-occupant's mortgage wraps around the underlying debt that I bought the house with. It's perfectly legal as long as you do a wraparound mortgage, which discloses to everybody exactly what's going on, and that you have permission from your underlying lender to do that. And so I just found a way to make money where I didn't have to be a landlord, and I've just done it rinse and repeat over and over and over and over again, and it's done very well by me.
And so one trick is getting a private lender who's interested in making a relatively long loan. What's a typical term of the loan that you get from these private lenders?
In that example, I borrowed $50,000 at 8% interest only for 5 years, non-recourse, collateral only. And I give them a first lien on a house that I just sold for $110,000 or that I got for sale for $110,000. So if I don't pay them their 8%, which is $350 a month, then they take my house, which can bring in $850 a month.
Sure. And my question is, how long is the term of most of the lenders?
It's 5 years interest only.
Okay. And then what happens? You have to get another lender or see if they want to renew, extend the term?
Well, as I wrote on my blog, 1000houses.com, all the ways to exit. We could talk about it for a long time, but you can sell the note. You can refinance with a community bank and get a 15-year 4.5% loan or 5.5% loan and pledge your note, because you don't own the house anymore, so you can't refinance the house. But I do have a note for $100,000 at 10% for 30 years. Mm-hmm. I pledge my note and I take out my underlying lender.
Okay, all right. And the other trick is, and we'll talk about that after this coming up break. But we'll talk about how you find properties that are that much under market, because that's quite a spread in the purchase price versus resale price. But as far as to wrap up here on the notes, have you seen? Now you've been doing it for quite some time, so the market course has been quite different here, and since the crash and in the last few years, where there's been a gap in the available financing from banks and conventional sources. So the private lender has had quite a new role to play here in recent years. I know.
Now you're talking about the good stuff, Tom, because I didn't need a bank to buy the houses, and I didn't need a bank to sell them. So during the recession, the rents were going up because no one could buy a house. My sales price is based on the rents. I just back into the payment that they're paying for rent. I give them the same payment for ownership. My owner finance houses were appreciating in the recession.
Yep. Mitch, we'll be back with you in just a moment on KDOW AM 1220, the Wall Street Business Network. This is Tom Wilson on Real Estate Radio Power Investing. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Mitch Stephen with us today from San Antonio, someone who's learned how to make money in real estate by being a bank instead of being a landlord. He's author of the series My Life in 1,000 Houses. Mitch, so buying a house for 50 and selling it for 110 sounds great. I presume those margins are compressed somewhat now. What are you seeing in this day and age where we're making this recording in 2017?
Well, I buy about 70 to 100 houses a year. The market's so hot right now, and I believe that we're at the kind of a bubble, so I'm not following the prices up. So maybe this year I'll just buy 70, 75 houses. I still average 58% loan to owner finance sales price. So if I'm buying a house that the rents dictate that people are willing to pay $100,000 for, then I'm averaging paying $58,000 for that house. In my career right now, I have more than enough data, and I know that it doesn't seem logical to a lot of people, especially maybe from California where prices and economies are different, but I average 58% a loan. I get a 100% loan every time. That makes my ROI infinity because I don't have any money in it. In fact, I pick up a down payment, put it in my pocket, and then I create a income, a cash flow. So, I find houses at these prices every day.
So are you saying that your average purchase is 58 for a house that you can sell for 100?
Yes, I'm averaging 58%, 100% loan. And,
okay.
I'm averaging 50%. I'm borrowing 50% of what I can sell it for.
And the 100K valuation, is that based on sales comps or just what the owner is willing to pay?
No, it's based on the rents. The core belief of my strategy, my owner finance strategy, is that a person paying $1,000 a month rent would rather pay $1,000 to own if they only knew how.
Mm-hmm. Okay.
And the separator is going to be their down payment because they don't have credit. If they had good credit, they could go get a traditional loan and deal with that, but they don't. So the next best choice is to owner finance, and whatever. If you're going to pay $1,000 a month, let's pay $1,000 a month to own, not to lease. Because what will the rents be in 10 years from now, 15 years from now, 20 years from now?
Sure. So what you're selling them is not you're selling is ownership of a home. The home is not necessarily would appraise at $100,000, but it's worth $100,000.
It depends on the cycle. If we're in the middle of a recession and in the lesser parts of town, houses are going for 50% of their value and 70% of the houses are selling for cash, I might be selling 25% over the market that day.
Okay.
But they're going to come back. And the great thing about it is with my program, they're paying the same as they were as rent, but the principal and interest never goes up. And one day it zeroes out.
So what percent of your buyers wind up defaulting and you have to take it back?
Well, there was a day when I was young and learning, and it was at 10 or 15%, and there's a day when I'm much better at qualifying people, and I've learned to wait for people with substantial down payments instead of minuscule down payments. Mm-hmm. And now my flip-out's around 4%, which will move to 8 or 10% during the recession. But that's not all bad, and I don't want to live off of anyone's failure or take anyone's house away from them. But if a certain amount of houses go bad after 5 or 6 or 7 years, I get to reclaim that appreciation that I did not get as a bank.
Sure.
I get to reclaim it.
Sure. Good. So that's a pretty that's a surprising small percentage. The numbers I've heard about typical lease to own kinds of numbers are that the majority of them wind up coming back. So you've learned how to qualify it better. So we'll be back. Mitch, we're out of this time for this segment. We'll get some more on that in just a moment from Mitch on the Real Estate Radio Power Investing on KDOW AM 1220, the Wall Street Business Network. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
I have Mitch Stephen with us today from San Antonio, who's flipped, like 1,500 houses so far. And by flipping, it means he's really hung on to the income stream from a large percentage of those by being the banker instead of the landlord. So we're talking to him about that. Mitch, tell us just briefly, what are some of the some of the keys and things that you've learned to buy properties under value?
Well, in my second book, My Life in 1,000 Houses, 200 plus ways to find bargain properties, I share a lot of the ways, but it keeps getting more sophisticated and more of an art. Today with technology, the secret is not to go where you're competing for houses. The secret is to get to people that have short fuses for whatever reason, and you're there, and they have to make a decision soon, and there's no competition in the room. So you can do this number of ways, but it takes a little technology, and you got to be very consistent, and you got to be fast.
Okay. Can you give an example of a source?
When you mail your postcard, I'm looking for the return postcards, because if they didn't get my postcard, they didn't get anybody else's. Now that's when my day starts. I just mail them just to get the returns. I'm not waiting on people to call me. I'm mailing 10,000 postcards so I can get 100 return mails. That's the guys that going after. No one, it's a whole nother level.
Uh-huh.
The harder they are to find, the more I'm intrigued. The less I will give up. The harder I'll hunt them.
Okay, all right. And what about financing our private lenders? What's your source of finding loan money?
You can be real successful at this business, but you'll become a multi-millionaire when you master the art of raising private money. And it's not about you; it's about the deal. And a lot of people out there would like to make 8%, but they're afraid. They're sitting in 1% CDs. They're sick and tired of gambling in the ticker tape or having to watch that ticker tape every morning. A lot of people have quit that and are not going to go back to that. And so here's a viable option. It's not really hard to sell. If I don't pay you on that $50,000, you're going to get a $100,000 house. If everyone in Bernie Madoff's scheme would have had a $100,000 house pledged for every $50,000, $60,000, $70,000 they invested with him, not one of them would be broke.
Good point. Indeed. That's a.
So it doesn't hurt to have a 22-year, 1,500 house track record, and references as long. But for those of y'all that are out there yourself that want to find the money, it's not about you. It's about the deal. What do they get if you don't pay them? If it's good enough, they'll go in. What is the collateral? For those of y'all that are sitting around with money in 1% CDs and want to find a viable option, maybe I've just described a viable option to you.
Well, one of the attractions it looks like for your private lenders is that the amount they're loaning is a pretty low LTV. So if they have to take it back, it's unlikely that they'll lose money.
You can never say anything for sure, because one, it's against the law, and two, if the good Lord decides things are going to end, they're going to end. But if things go the way they've gone the last 200 and whatever years in this country, everybody's going to be fine. You can't get wiped out,
Well, that's.
I think houses will always be. I think these little bread and butter houses will always be worth something. The day that they're not, we're picking up guns and we're going somewhere.
Yeah, I think so. Mitch, tell us a little bit about your the books you've written and the education that you do to help others learn how to do what you've done.
I never planned to be here. I never planned to write a book. I had a tragedy in my life, and I didn't know it. But how I vented was I started cataloging my life and started writing and journaling to try to deal with my grief. It ended up being My Life in 1,000 Houses, Failing Forward to Financial Freedom. And that book accidentally caught on, caught the eye and the hearts of people, because I was telling a very true story, because I really didn't care what anyone thought at that moment. I was showing all my scars, how I fell down. People actually ask me, aren't you embarrassed to put this book out? And I go, no, it's the truth. I don't really care what anyone thinks. And then it led to people asking me, how do you buy so many houses? And so I wrote 200 plus ways to find bargain properties. And then I wrote the book I really wanted to write, which was the niche that not very many people delve into, which was the art of owner financing. And they're all under the heading My Life in 1,000 Houses. Those are the subtitles.
And when was the first book published, The Life in 1,000 Houses?
It was 2008.
Okay. So it was in the midst of the big crash.
Right. And I that's where I learned that my business was, if there is such thing as a recession-proof business, I think I may have one. I hate to even say it out loud because it's a very scary, big sentence, but I think I have a recession-proof business, because in every recession, the banks stop lending. And my model doesn't need a bank to buy the houses, and it doesn't need a bank to sell. And in fact, my houses appreciate with the rents when the banks aren't loaning to buyers.
And the last time I checked, people still need to live somewhere, and usually when there's a recession that hits, you've got folks moving down and rents and quality of place, and so the ones that you have are for the working class, and they've got to live somewhere, and they might have more than one person living there, but as long as they're paying that check each month, and you therefore can pay your private lender, it continues to work. Did I sum that up okay?
Yeah, the thing is I don't believe in going to the bottom of the bottom because there's a lot of turnover there and a lot of strife. So I'm in the middle class, the lower middle or the middle, or even maybe sometimes the upper middle, but I stay in the middle. Walmart houses for Walmart people will always be a place, those houses will always, even if our currency collapses, we'll be leasing out those houses for goats and cheese and cucumbers and, heads of lettuce.
Right. We may be back in the barter system one of these days. So, so how many houses do you have right now that you're getting the spread on about?
Well, I have about 250 here in town, but I sold a lot of my notes, or I manipulated a lot of my assets because notes are temporary money. They're going to expire. Uh-huh. So I created my wealth with the owner finance strategy, which is temporary income, though it may be 10 years, 15 years, but it's still temporary. And I converted it into forever cash, to use a term from Jack Bosch. And I bought boat and mini storages. I buy self-storage units, and that's my forever. They never end until I want them to end.
Okay. Mitch, we'll be back for a little wrap-up here in a moment. Mitch is an author, investor, flipper, and educator who's learned how to make money without being a landlord using real estate, one of those valuable, long-time, tangible assets. So stay with us, and we'll be back, and Mitch can tell you about how to get access to his books.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So, Mitch, you're taking some of the profits and some of the cash flow that you're getting from these houses, and you're investing them in some commercial properties. Did I catch?
Yeah. I'm very fond of self-storages because, they're just dealing with people's stuff, not families and kids and school districts and all that.
Mm-hmm. Okay. Any other kind of asset class you like other than self-storage and commercial investments?
I like boat storages also, especially if they're around the water, but I'm talking about dry land storage where, they pull their boat on a trailer and back it in, and that lends to RVs and campers and all other kinds of stuff, but I like boat storage as well.
And why do you like boats more than, say, other storage like RVs?
Well, I like boats better than self-storage because, the average boat these days costs $50,000, $60,000, $70,000, $80,000. These guys, $200 a month is not their problem. There's a very low delinquency. If they ever fail to pay, the bank will make up the payments because they want that asset out of my storage facility, and they can't get it unless they pay me. So I like boats.
All right. How can folks? You obviously have been very generous in your willingness to share what you've learned. You've written 3 books. How can folks get those books, and what other education resources do you have, Mitch?
Well, you can get all my books and a whole bunch of free stuff at 1000houses.com. That's 1000houses.com. And that's my educational site. I've been cited for giving away everything. They say, you give it all away. And I said, I'm going to give it out there. If a person can go and do it on their own, more power to them. If they want to hire me as a coach to shortcut some stuff or to save some anxiety or to give them some quicker confidence, then they'll find me. So I have a real low-key attitude about it, and I stay plenty busy, Tom.
Well, it sounds like you've got a mentality of abundance instead of scarcity, and I'm sure you've gained a lot of friends that you swap notes with, and everybody does better in that situation.
It sure is. And if I may mention, I have a podcast where you can get tons of information at reinvestorsummit.com. reinvestorsummit.com. And I interviewed 2 people, including my good friend Tom Wilson here. We interviewed, so we can go there and get a ton of information.
Indeed. And I've been on there, and there is a lot of education information. Highly recommend it. Mitch, thank you so much for being on the program today. I learned some things, and as I always do with my guest, and I hope you, our listeners, did too. So, Mitch Stephen, was nice to have him on. And remember to go to TomWilsonProperties.com to sign up for our weekly newsletter. It lets you know what's going on in the country and world, as economics and other things related to real estate itself. Also, it's a way to get access to commercial syndications that we make available to our investors who are signed up with us on our website for different kinds of properties, in industrial, multifam, office, retail, lots of different asset classes that you, for $50,000 a share, you can have ownership of, and many of them have instant distributions. So nice to have you with us on Real Estate Radio Power Investing. It was nice to have Mitch on today. We look forward to having you back on the next program on Real Estate Radio Power Investing here on KDOW.